Imagine spending 40 years building your retirement. You worked through good times and bad. You paid your bills, raised a family, survived recessions, and put money aside whenever you could. Finally, retirement arrives, and for the first time in decades, you feel like you can breathe. Then one morning, you open the news. Another bank is making headlines. Markets are swinging wildly. Inflation isn't disappearing as quickly as people hoped. Interest rates keep changing. Suddenly, one question starts creeping into your mind. Is my money really where it should be? That's exactly why thousands of retirees across America have quietly started making changes. They're not panicking. They're not emptying their bank accounts overnight. And they're certainly not telling everyone what they're doing. Instead, they're making careful, strategic decisions to better protect the savings they've spent a lifetime earning. Today, we're talking about why that's happening, what concerns are driving these decisions, and the common strategies many retirees are considering. This isn't about fear. It's about understanding why more people are asking important questions before a financial surprise catches them off guard. Let's begin. A retired couple in Arizona had followed the same financial routine for nearly 20 years. Their paychecks stopped. Social Security and retirement income took over. Most of their savings stayed in the same bank where they'd always done business. They weren't trying to get rich. They simply wanted stability. But over the last few years, something changed. Prices climbed much faster than expected. Groceries cost more. Insurance premiums increased. Medical expenses became harder to predict. Even simple things like home repairs suddenly felt much more expensive. For the first time since retiring, they realized their money wasn't stretching as far as it used to. That realization didn't make them panic. It made them pay attention. And that's where many retirees are today. Not afraid. Just more aware. One of the biggest reasons retirees are moving money is surprisingly simple. They're looking for safety. When you're 35, you have decades to recover from financial mistakes. When you're 72, time becomes much more valuable than opportunity. A major market decline doesn't just reduce numbers on a screen. It can change someone's entire retirement lifestyle. That's why many retirees start reviewing where every dollar is sitting. They ask questions they never asked before. Is too much money sitting in one place? Is this account still earning enough interest? What happens if inflation stays high? Could I access my money quickly if I needed it? These questions aren't signs of fear. They're signs of experience. Experience teaches people that markets move in cycles. Economies change. Policies change. Life changes. And retirement plans sometimes need to change too. Another reason retirees are quietly moving money has nothing to do with investing. It has everything to do with flexibility. Imagine needing emergency surgery. Or helping an adult child through a crisis. Or replacing the roof on your home after a major storm. Unexpected expenses rarely arrive at convenient times. That's why many retirees are making sure they have easier access to part of their savings instead of locking everything into one strategy. Think of it like carrying an umbrella. You don't expect rain every day. But you're glad it's there when the weather suddenly changes. Financial flexibility works the same way. Here's something many younger people don't fully understand. Retirees often worry less about making more money. And much more about not losing what they've already earned. That's a completely different mindset. A 30-year-old investor might celebrate a risky investment that doubles over 10 years. A 70-year-old retiree may prefer knowing their savings will still be there next month. There's comfort in predictability. And during uncertain times, predictability becomes incredibly valuable. Another trend experts have noticed is diversification. Years ago, many people felt comfortable keeping nearly everything in one institution. Today, some retirees prefer spreading assets across different accounts and different financial tools. Not because they believe disaster is coming. Because concentration creates risk. Think about your home. Would you keep every important document in one drawer without making copies? Probably not. Most people naturally spread out important things. Retirees are increasingly applying that same thinking to their finances. Inflation has also changed the conversation. Many retirees remember when a weekly grocery trip cost half of what it does today. Gas. Utilities. Dining out. Prescription medications. Nearly everything costs more than it did just a few years ago. Even if inflation eventually slows, higher prices often remain. That means retirement income has to work harder. For some retirees, moving money simply means searching for better returns on cash that had been sitting in very low interest accounts. They're not chasing risky investments. They're making sure idle money is working instead of quietly losing purchasing power over time. Healthcare is another major reason. Few things create financial uncertainty like medical expenses. Even with insurance and Medicare, out-of-pocket costs can surprise people. One unexpected diagnosis can completely reshape a retirement budget. Because of that, many retirees are setting aside larger emergency funds than previous generations did. They want peace of mind. Knowing they can handle a medical emergency without completely disrupting the rest of their retirement plan. Family is another factor people rarely talk about. Many retirees quietly help their children or grandchildren financially. Sometimes it's helping with college. Sometimes it's assisting with a down payment. Sometimes it's stepping in during difficult times. These acts of generosity often come without public announcements. But they require planning. That's another reason retirees review where their money is located and how quickly they can access it if someone they love needs help. Now here's something interesting. Most financially successful retirees aren't making dramatic changes. They're making small adjustments. One account gets reviewed. Another gets updated. Beneficiaries are checked. Emergency savings are increased. Old financial plans are refreshed. These aren't exciting decisions. But they're often the decisions that create long-term stability. Sometimes avoiding one major mistake is more valuable than making one brilliant investment. Let's talk about something emotional for a moment. Retirement isn't just about money. It's about freedom. Freedom to travel. Freedom to spend time with grandchildren. Freedom to sleep without financial stress. When people feel uncertain about their savings, that freedom starts disappearing. Even wealthy retirees can lose sleep if they aren't confident about their financial plan. That's why many are quietly organizing their finances now instead of waiting for uncertainty to become a crisis. Peace of mind has tremendous value. And unlike stock prices, you can't measure it with a chart. There's another lesson worth remembering. Many retirees have already lived through multiple financial crises. They remember high inflation. They remember recessions. They remember housing crashes. They remember market corrections. Experience teaches something younger investors often haven't learned yet. Every financial storm eventually passes. But preparation matters. The people who prepare usually make calmer decisions. The people who ignore warning signs often make emotional decisions when it's already too late. This doesn't mean everyone should rush to move money tomorrow. Far from it. Every retirement situation is different. Income sources differ. Expenses differ. Health differs. Goals differ. The smartest retirees aren't copying someone else's strategy. They're reviewing their own situation honestly. They ask whether their current financial setup still matches the life they're living today, not the life they planned 10 years ago. That's an important distinction. One of the biggest mistakes retirees make is assuming that because something worked in the past, it will automatically work forever. Financial life doesn't stand still. Neither does retirement. Needs evolve. Markets evolve. Families evolve. Sometimes the smartest financial move isn't chasing higher returns. It's reducing unnecessary risk. Sometimes protecting what you have becomes the greatest investment of all.